Guys, what is going on? Welcome to Best Bet Trades nightly video. Haven't done one of these yet before, but in this video I want to take everybody through and show everybody how I prep my charts. Haven't marked anything up from today, so everybody that doesn't know, if you do know, that's great, but I'm going to explain it for some new people that maybe are on the edge of getting into investing, or maybe on the edge of getting into more specifically futures trading. It's a great alternative for people who maybe work a 9 to 5 and don't have the capability to trade either options or futures during the day. A lot of people don't know that it's not like options. You don't have theta decay. And also, there's no expiration, right, with futures. So gives everybody, kind of a different perspective. And on top of that, the tax bracket playing futures is also considered long-term capital gains. And if you've gotten to the point where you're profitable either trading options or futures, you can understand that capital gains can be pretty insane. There's a pretty big difference from, short-term capital gains to long-term capital gains. So I won't go through the whole gist here on why you should trade futures, but more specifically, guys, before we get into it, if you guys could hit the like button for me. A lot of people watching the videos, but not very many people putting in the engagement. So, the reason for engagement on YouTube is to hopefully get it out to some people that want to see it, So it's going to be a little mentorship here. Hopefully it can help you guys. So we're going to do it on ES. I know some of you might trade NQ or SPX, or maybe some other stuff, but in this video we're going to focus on ES, and I'm going to show you exactly how I market. If you guys don't know, futures close at 5 o'clock and they open at 6 p.m. so they're closed a total of 1 hour a day. So we get to trade through the Asian session and the London session. Asian opens at 8 and London session opens at 2 in the morning. So from 6 to 8, that's basically just I guess you could consider it New York Stock Exchange still. Usually the craziness happens, around 8 o'clock when the next market opens. But you can get some good moves. And if you guys have traded futures, you know that you really don't need much to make a lot of money. So let's get into it. So zooming out here, let's zoom out onto the 5 minutes. So looking at everything, I went over a video on this earlier. Obviously, we had some liquidity created up here. And we know it was liquidity because obviously for Monday, that was the high, right? And we had lows here. I didn't have it marked, but this would have been the low in this area. You could consider this a low, but the prominent highs and lows here, obviously the lows are going to get swept, and eventually the highs are going to get swept in a given range of time. So what happened here? Well, we had the buy side liquidity. Obviously, it came up, so I'm not going to talk about it too much in this, but it obviously came up and grabbed that liquidity. So what we're actually going to do is we're going to delete this liquidity box, okay? And we're going to delete the sell side liquidity box because this has also been grabbed, okay? I'm just showing you guys this so you can see how I mark my charts, okay? So right now it's currently 5:10, so we have about 50 minutes until the market opens. Typically I do this, 5 minutes before market open at 6 p.m. just because it usually doesn't take me too much time. But the first thing I'm going to do is look at where price action closed at 5 o'clock. So I'm going to put a horizontal line right there in this range. And I'm going to mark this 8:10 because it is 8:10, right? That's today. 8:10 and dog. Now some of you might mark it, and then this is going to be the close. Some of you might mark it 8:11 because technically when the futures open tonight, it's technically the next day. But I just do 8:10, so I guess technically my dates specifically are, in some terms, for some people they're lagging a day behind, but this is just what works best for me. It really does the same thing at the end of the day. It's all about how you want to look at your charts, because if I zoomed out here, you could see I have tons of N dogs and N wogs that have been created all across. Here's yesterday. Typically we'll get a gap when we open, but we didn't get that yesterday. Opened and closed in the same area. So got this. So obviously when the market opens at 6 p.m., rather it gaps up or it gaps down or it opens even, I'll end up putting in my N dog open, right, for 8:10. Now, a lot of you are probably asking, why do I mark the N dog or N wog? N dog, first off, is like your new day opening gap. So that would be like Monday, Tuesday, Wednesday, Thursday, Friday. The N wog would be a new week opening gap. So basically, an easy way to remember it is just N wog's going to be Fridays closed, Sunday nights open. That's the only difference. And N wogs typically seem to be a little bit stronger. But you'll see trading tonight if you mark all this stuff up, or whatever night you're trading, whether we have a gap or not. It's a lot stronger when we have a gap. If we zoomed out, you could see that it really didn't do much with this level just because it didn't create a gap. But if we get a gap, it's going to have a very strong, it's going to be a very strong either resistance or support level when we get to that area. And you'll see as you trade more, marking this stuff out, you're going to see that, you know, a lot of things happen at these levels. Not only that gap fill eventually, but also you can use it, you know, to add to the confluence if you're getting into a certain trade. Rather that N dog or N wog is below you or above you. You know, if you're already planning on going long and the N wog's up there, or N dog or N wog's up there anyways, it can just add to that confirmation to get into it. So typically I'd have all the best bet trades indicators up too, but in this case, I shut them off because I can function seeing all the stuff on the chart. But I know for these videos, a lot of people will watch and maybe get a little overwhelmed. So with all the charting and things going on. So try to make it, you know, the least complicated as possible. So, all right. So we got that. That's the first step. Next step, I'm going to look at the lows and I'm going to look at the highs, right? So what am I going to do? Well, I see the high here, and this is going to be a liquidity level. And you can see these wicks here. Typically, a lot of people will put a line. Sorry, that's my phone going off. You can either put a line up here or you can draw a liquidity box. In this case, just because there's so many wicks up here, I'm going to go ahead and just draw a liquidity box. Again, liquidity box or a line, it really doesn't matter. Don't make it too complicated. You know, a lot of these YouTubers and stuff, they'll kind of walk you through trading, and I'm just going to make this whole area. I'm going to see, because you can see there were some wicks down here too. I'm just going to make this whole area liquidity because, again, don't overcomplicate things, right? You really are just looking at this level for an area price is likely to go to. So we really don't need to get super elaborate into this, okay? This is just a price target, right? This is nothing more than a price target that is going to get hit. We know it's going to go above to grab the liquidity. We know it's going to wick above this previous wick here. So anywhere in this area, you just need to know what it is and why it's there, okay? This is an area that will get taken out. So make the box as big as you want. We'll just start there. I actually have to unlock it. I'm going to just say, oops. Okay. I'm just going to say 8, 10 buy side liquidity, right? Why is it buy side? Because it's on the top. It's the high, right? We'll say buy side liquid. So we got that locked. Next thing I'm going to do is I'm going to look down at the lows, okay? We can see these lows got swept. Again, we're just here to make things not complicated, okay? So I'm just going to go down here. Honestly, I'm going to go right here, right? I'm going to draw a box right here where this kind of got wicky. Again, don't make it too complicated, because when it does come down and grab this, it's going to wick below this low wick here, okay? So this is just an area to give us confirmation when we get here, where price is going to go. When it does come down here to sweep this liquidity, it's going to grab this low right here. So again, don't get too fixated on the box, you know. Focus more on what the overall motives are for the market, okay? And I'm just showing you how I do mine and what's been proven to work. So we got both of those marked up, and you can see all my stuff up there. That's from doing this every day, you know. Some of that can probably be deleted because, you know, obviously liquidity's been taken in those areas, but in some of those areas at least. 8, 10, and obviously what's this going to be? The sell side, right? Sell side liquidity. So now that we got that, I do want to point something out. So obviously we have these two macro levels here, okay? This is where the how do I put this into perspective for you guys? These are going to be the levels here that the market is going to go to. Now, that doesn't mean there's not going to be rejections and things in between, right? Obviously, we know the lows have just been freshly swept. There's things below that, and we're going to get into it. So we need to be aware of everything going on. Typically, though, when it grabs liquid, it's going to bounce. Now, is this going to bounce and grab this instantly? No, it might go down and grab the things below that we're going to discuss, drop below this new liquidity box here, and then that'll be the new lows, right, when the market closes. But so, just because it got these lows here, created new liquidity down here, doesn't mean it's going to drop down and grab that liquidity just because we're right next to it. Super crucial that everybody understands that, right? Remember, the market makers and institutions with big money are in this to screw over as many people as possible, because if you don't know where the liquidity is, you're the liquidity. So, obviously it created these lows. Look at this is a perfect example. Look what it did here. It came down. Some people may have thought, oh, it's going to grab the lows again. No, it bounced right there. So, again, we could see it open up and come back down and grab that liquidity and then move up. But we could also see it come up, grab the buy side liquidity again, and then sell off. So now that we got those two major levels and our end dog close, remember, we're going to add that end dog open once the market opens at 6 p.m. Okay. So now for my night trade at 6 p.m., what I'm going to do is mark out likely scenarios here. If it goes to the positive side, the likely scenario there. If it goes to the sell side, the likely scenario there. Basically price alerts, okay? And today's 8/10/2023. So if you're watching this, if this video gets out on time, this obviously could be big for you guys if you're going to be trading tonight. So looking above, what do we have here? Well, I have videos out on it, on fair value gaps, okay? And we're on the 5-minute time frame right now, so take that with a grain of salt, but they do work. So I'm going to mark this fair value gap here, and we're actually going to change this color just so we're aware. Let's just go yellow, and then I'm going to stretch this out, okay? Now, if you guys don't know about fair value gaps, again, I encourage you to watch that video. You'll have to go find it. But fair value gaps, typically, unless you break out of them violently, let me mark this up real quick. 8/10 fair value gap. And I like to put the dates just so when I'm deleting stuff, I can kind of go back if it's confusing and delete those. But typically what happens in a fair value gap is once you get into it, if you don't get a violent shove over it, you're going to be in a situation where it'll fill this fair value gap and then reject again. So obviously you can see here price action is very close to this fair value gap right now. So if this has a small open with green, I'll probably get into it and ride it up to this fair value gap fill. Again, there's another fair value gap up here that we're gonna mark up. And again, some of you might be going, what's he marking up? I can't see it. This is something that you guys need to watch the video on so you understand what a fair value gap is and what it does, okay? So we're going to mark this up too, okay? 8/10 fair value gap. So again, if it breaks up and fills this fair value gap and goes up to the next one, I'll know another area that's probably going to reject off of once it gets in there. Again, I'm trying to hold myself back from going too in depth with it, just because, I have a video for that. This is more just marking things up. So really for the nighttime, that would be all I need to mark for the positive side, but we'll go ahead and mark, just a couple other things while we're up here. So, I do want to mark some things where, well, we're actually not going to mark them. I do want to mark some other areas in the middle where there'd probably be liquidity up here. So these areas where you see it go up and then have a big candle down, that's typically going to be an area where a lot of long positions got stopped out on these big candles. That's why I encourage everybody to start with one contract and just ride that out until you have enough fluff to not get stopped out, because this happens all the time. So this is going to be an area of the market that's got a ton of liquidity, and you can actually see over here to the left, you've had a couple wicks come into it, but this fair value gap never actually got filled. These came, see that little difference there? But I'm not going to mark that just because it's probably on a higher time frame. We'll see it a little easier. I'm just looking at really the micro right now, because again, when this goes up, I'm gonna play just this little spread here. I'm really not gonna wait all night for the market to get up here and do all this stuff. I'll worry about filling stuff out up here tomorrow. So this is basically gonna be my upside, and if it breaks through there, I'll go through and fill all this stuff out too. But right now I'm not worried about that. So what do we have here? Really, there's nothing below. We do have a little imbalance right there, and I'm going to zoom in on this so you guys can see it. All right. So this is a little imbalance right here, and we're going to mark that. An imbalance is where the bodies of the candles, there's a small gap there, and these, believe it or not, sometimes when they're small like this, it's hard to control the thing. Believe it or not, these areas here also have very strong power, right? So if the price action gets down to that, it's probably going to fill that because that's an inefficiency in the market, and the market wants to be as efficient as possible. And if it breaks through it violently, then it's a level we're not going to pay attention to, but there's a chance that the market could come down and wick off of that and then go up. So this is something we need to watch for. And again, things usually aren't this tight, but today, every day is a different day, and that's just what we have today. So I'm going to mark this 811 or 810. I don't know why I keep saying 11. Imbalance. Okay. An imbalance is when you still have wicks there. A void is when there's no wicks at all, right? So this is an inefficiency in the market. So I'm going to mark that. That would be my first target to go long if it bounces at that level. Again, we don't have anything right here, below us aside from the next level, which is going to be this liquidity that I'm looking out for. So what's it going to do when it comes down? Is it going to come into the liquidity box here, or is it going to break down? And if it breaks down, let's get to a higher time frame. So you can see everything looks way different when you're in a higher time frame. You can see, this fair value gap up here. See how these wicks don't line up? That's an area that's going to have a strong impact when price gets to it. And then you have this huge fair value gap up top here, and then our buy side liquidity's up here. So looking back, so I'm going to zoom out. Hopefully I don't lose you guys here, but try to do this. So that's the bottom box, the sell side liquidity that we marked out. Okay. I'm going to do a line right here just because I don't want to drag the box that far. So price is up here, right? Or price is up here. Our sell side liquidity is somewhere around here. Looking down below that sell side liquidity that I had my eyes on today, and that I'm going to mark is this fair value gap right here, this buy side inefficiency. Probably don't have to worry about it tonight, but I am going to mark it, and I'm going to go to the lowest wick that got into that fair value gap, okay? Because that's going to be I'm going to have my eyes on it once it breaks that. So again, usually I draw a box. I just don't want to draw a box that far. So 8, 10 fair value gap, and we'll just call it that. So now, and then this would obviously be the bottom of the fair value gap here. Okay. Again, if I were to draw a box, it would just be, the bottom of that wick here, and then I just drag that across. You see how the bottom wick touches it, top wick touches it, and that would be that, right? And honestly, if we really want to, we can drag this over and just delete that line so we don't have any confusion. Whatever. And then we'll just delete this, delete that line. Okay. And we'll mark this 810 fair value gap. And now it's a lot more simple looking at it. So now that I have everything pretty much marked, the only thing I'm missing is my 810 end dog open. Okay, so what does all this tell me tonight when trading starts? Well, it gives me very clear areas where the market could potentially reject, right? It gives me areas that I can wait for to get in a trade. It gives me areas, okay, if this thing starts selling off and breaks through this imbalance violently and starts closing below the imbalance, we want the candle bodies to close. In order for this imbalance to be voided, we want candle bodies to close below this imbalance. It's the same with the fair value gap. If this wicks below the fair value gap, that's okay. But if we want the fair value gap to be a support level, we want all of the bodies of the candle to close inside of this fair value gap or above it, right? And obviously, if it was price action going up into the fair value gap, it'd be the same vice versa. If it wicks above it, it's okay. We want the candle bodies to remain closing inside of the fair value gap. If that, like here's a prime example right here. You see this fair value gap that was right here? We had candle bodies closing in it, and then it came all the way down. It broke through the fair value gap, and the candle closed. Now, this was power hour, so obviously we had a big jump back in, blah, blah, blah. That's because it was power hour, right? And then it actually came up and filled this fair value gap here. And that's exactly what happened there. But typically, we want the candle bodies to close within the fair value gap. If you get a candle body close below, it's probably going to have a continuation. So it's just important to keep your eyes open on all of those factors. But if we have a candle close green, it's going to be very tight tonight just because this imbalance is so close to where we're at right now. So if we get a green candle, I'm going to want to see what it does here at this fair value gap, and wait, be patient and wait. If it starts rejecting here, that'll be when I get into my entry, back down into end dog close, or open, right? So for instance, if we had a big gap up in price action at 6 p.m. and it goes up and fills this fair value gap and starts rejecting, that would be my short entry to ride it back in to fill that gap that's created. So hopefully this video helps you guys out. Again, tonight's very tight, as far as things being very close to price action. Like compared to yesterday, it was very easy to see, fair value gaps were $5-6 away and balances were $5-6 away. So you had a lot of room, even $10 away. You had a lot of room for a play. But here, a night like this where everything's super close, you just really have to be patient and nail that entry. So hopefully this video helps you guys out as far as marking charts. Again, if you watch this video and do the things that I just did in this video, don't forget at 6 p.m. you have to mark that open also. And you can do this on any stock, any stock that's open at night, really any stock, but this works for everything. So that's the video, guys. I hope everyone enjoyed and stuck around. If you stuck around this long, let me know down in the comments. I appreciate each and every one of you, and have a fantastic night and good luck trading tonight.